In this quick video today, I'm going to talk about the banks and why they will shut you down, how to understand banking de-risking, and the solutions that you can do. So, the reality of getting your bank shut down often means that you're in a high-risk industry or you're doing a lot of volume in whatever that might be. Now, the traditional banks, they're tightening up regulations and compliance all of the time. So you might be watching this video as someone who has a normal business and it's still affecting you, right? So that is why this topic is important today. Mostly, we're trying to talk to the people within the high risk industries moving a lot of volume and they have continuous banking problems. So I'm going to go through everything today. It's going to be a quick video, but you're going to understand everything you need to know. So stick around to the end. We are Forward Point Solutions who help many individuals and businesses set up worldwide with banking solutions, trust, asset protection, and a lot more. Check the link below to see everything. Even if you are a legitimate licensed business, your bank could shut you down tomorrow with no warning. Just straight away, frozen account, and you cannot reach your funds. This is why we are seeing such a rise in fintech and EMIs and crypto adoption. So why banking shutdowns happen so regularly, right? Even affecting people and organizations who are fully compliant. So this isn't about the client behavior or just violations. It's about a systematic risk management and banks, right? Sometimes this wouldn't even be a person, it's an algorithm just shutting you down for something they deem suspicious or high risk. The reason they do this is because they're protecting their own interests. They do not want to go near anything that they deem to be risky, to have any violations. So this issue is really affecting legitimate businesses, even if you're in crypto, foreign exchange, gaming, adult entertainment, and other sectors that the banks deem high risk. These shutdowns can freeze millions of your assets overnight, also creating a lot of headache, slowing down your scaling operations. If you cannot reach your bank and your money within a week, within a few weeks or a month, your competitors are going to go over you and steamroll you. So this is a big problem and it's an urgent problem. So why banks de-risk entire industries? So a tier one bank can systematically avoid entire industry sectors because of the reputation concerns and compliance pressures from the regulators and the correspondent banking partners. So it looks a little bit like this. This is a terrible little visual, but you can get that point. A high risk industry classification goes to a bank review for compliance. It goes into a de-risking policy, which is applied, and then your account is closed. Very simple. So, what are the primary shutdown triggers for this? Now, it's not based on your behavior, it's just based on the sector label you're in, the industry classification. So, this is why KYC is very important because if you are in any of these industries, you want to work with the bank as much as possible. You want to give everything detailed and compliant, and it's going to help you a lot along the line. Even when you apply for maybe, let's say, legal offshore banks or different options for your banking, you still need full compliance and full KYC. Now, going on to that next point, what I just said, if anything is missing in the compliance, even a little minor gap, it can trigger the immediate action from the AI or the person running the banking. Correspondent bank pressure. Banking partners upstream demanding risk reduction. They want the risk to a minimum because they need the credit and they need full compliance to keep their operation going. Regulation. Banks are going to close accounts to avoid attention at the slightest hint. Industry examples. Let's say a crypto exchange is licensed, but it still gets rejected because of the insufficient audit trails, despite full regulatory compliance. Now, a foreign exchange broker, very similar. You can be an established FX firm facing daily transaction limits and forced reserve requirements. iGaming, online casinos, and maybe the adult industry. Companies losing card processing capabilities overnight, disrupting entire business operations and slowing you down. So even fully licensed entities with pristine compliance, doing everything, ticking every single box, still going to face a shutdown because the banks, they operate defensively rather than logically. They prioritize risk avoidance rather than your client relationship. So for high net worth individuals and businesses in these sectors, consequences can be severe. We can be talking about millions lost, many weeks or months lost to your competitors who are going to steamroll you. Now, enough about the problems. How do we do the solution? So at our company, what we do, rather than fighting the tier one bank risk policies, we just design comprehensive strategies for the banking that work around these limitations. Our approach focuses on diversification and proactive compliance. For example, you want offshore banking access. introductions to banking partners across 60 jurisdictions, providing global and regulatory diversification. EMI and PSP rails, crypto-friendly EMI and payment service providers for seamless transaction processing, again in many jurisdictions. Multi-currency infrastructure, IBANs and safeguarding accounts across multiple currencies and jurisdictions for operational flexibility. Corporate structure optimizations. You want a trust and a holding company that's layered to separate your operational risk and protect your core assets. Remember, if you ever get in a situation where you're getting sued by a creditor or a competitor or whatever that may be, you really need a trust and a holding company set up legally. Compliance preparation. You want the pre-bank compliance packages and ongoing audit preparation to meet institutional requirements. Everything must be ticked. There's no point in not doing it, right? You need to be fully detailed with your compliance and preparation. Ongoing risk management, continuous monitoring and compliance support to maintain banking relationships for the long term. So the core philosophy over here is that you need diversification. Not only does it equal resilience, but it's smart thinking, right? You diversifying today protects your business and your assets for the next 5 years, next 10 years. So with us, and we've taken this approach, you're going to go from being a reactive to proactive. What this means, before working with us, the bank rejection, all of that happens all the time, frozen accounts, operational disruption and stress, limited options, reactive crisis management. And of course, with us in this little green box here, multi-bank access across all the jurisdictions, most of them anyway, clean, comprehensive compliance files, protected and diversified assets, operational continuity, assured proactive risk management, and also we hold your hand throughout the whole process so you don't need to worry, you're not there alone. We're not just advisors, we're not going to tell you go here, we're going to do it for you. So again, if you want peace of mind, you don't want shutdowns, and you want proactive banking protection and solutions, then go check my email below or the website and get in touch. We can sort you out.